Hello all and welcome to Risk Out's webinar, Preparing for 420, Specialty Banking and Cannabis Programs Unpacked. We are so excited to have you joining us today. Now, before we dive too deep into today's content, let's roll through some quick housekeeping items. Risk Out will be sharing all of today's webinar resources, including the slides, handouts, and a recording of today's session in a follow-up email, so keep an eye on your inbox. We also want these sessions to be as valuable for you as possible, so we encourage you to ask any questions you may have throughout today's session in the questions section of the webinar panel. We also run a few polls throughout today's webinar to better understand our audience, so your participation is greatly appreciated. For those of you that are joining us for the first time, Risk Out is a team of former regulators and examiners, BSA professionals, and fintech software experts who are building better cloud-based tools to help community financial institutions grow and become more efficient. We are funded and influenced by over 200 financial institutions through Launchpad and Castle Creek, the Bankers Helping Bankers Fund, and Alloy Labs. We're a true partner and not just a vendor, which is why 100% of our customers are referenceable. If you're interested in learning more, visit riskout.com and get in touch. Risk Out is embarking on a mission to take the BS out of BSA. Manual processes for transaction monitoring, risk scoring, and SAR filing are too tedious, and legacy BSA solutions are often slow and dated, causing inefficiencies in the day-to-day back office operations. That's why we're developing a new solution, and we want you to be a part of it. If you're interested in working directly with Risk Out's product team to test features, provide feedback, and collaborate to build the transaction monitoring system you wish you had at your fingertips, you can join our Founders Program today. We'll be sending out a link for you to click in the chat box during today's webinar. Next month, Risk Out will be hosting the webinar BSA AML Decoded, breaking down risk scoring to dive into the realm where expected activity meets actual behavior. Attendees will hear from former OCC regulator and product lead, Ryan McInerney. Visit riskout.com to reserve your seat for this exciting upcoming session. Today, we are joined by Peter Sue, the Director of Specialty Banking at Hanover Bank, and Kristin Parker, the Vice President of Compliance and Operations at Risk Out. Peter brings over 20 years of experience across the banking and financial services spectrum, including spearheading 2 cannabis banking programs as a team leader, and he is currently in the process of building out his 3rd program. He has also worked as a consultant to dozens of financial institutions across the country that are banking cannabis, as well as working with organizations like the Asian Cannabis Roundtable, the Minority Cannabis Academy, and the National Cannabis Industry Association. Kristin has worked on both fraud and BSA teams, where she successfully created and implemented BSA monitoring programs at community financial institutions for varying high-risk industries like hemp, MSBs, ATMs, cannabis, and more. She was also selected as PBC's Compliance Person of the Year last year by a group of her peers. We are very excited to have them joining us today. And without further ado, I will go ahead and pass it over to Kristin to dive into today's agenda. Take it away, Kristin.
Hi guys, it's good to be here with you today. I really thank Peter for coming too. I've been waiting to do a webinar with Peter for almost 4 years now, so we finally made it happen.
Hello, Kristin Parker.
So Peter and I are going to walk you through really just what specialty banking markets really are to begin with. Going to take a trip down cannabis banking lane and really talk about how you can optimize your program in that space as well. So we'll also walk through a Q&A session at the end. So if you have anything that you want to talk about or think of during this, it'd be wise of you to use the chat function to go ahead and type your messages in. So we'll start with talking about what specialty markets are. Specialty markets are a really broad term, right, Peter? It really can be really anything where your institution is usually serving an underserved market, right? It means that you are typically, and they're typically underserved because they cause a little bit more of a regulatory burden for the institution. I say burden, but I don't mean it to be, it doesn't have to be a heavy burden, right? If you have the right tools in your pocket, the right training, the right understanding of the industry, what you'll find more oftentimes than not is that businesses and persons in these really underserved markets are more misunderstood than they are really nefarious businesses, and that us as bankers just don't really have the right tools or training out there to feel comfortable banking them. So they are usually marginalized industries that really deserve a chance to bank because it's, the right thing to do. Offer them services so that, we can make it more safe for our communities, right? If businesses are forced to be cash intensive, that's a public safety issue for everybody involved. So opening up specialty markets is, important if you're a financial institution that serves their communities as well, because as community financial institutions, what's our purpose? To serve our communities. The big box banks out there are not necessarily catering to those that are in their backyard. So there's a lot of opportunities in your own backyard for really understanding who's there and what the needs are of your community, because I guarantee you what we'll be talking about today is in your own community. So not only do we want to talk about the different markets in specialty banking, but we also want you to understand that by opening up your doors to this, it could bring you opportunities for further deposit growth, fee income revenue, a combo of the both, lending opportunities, so on and so forth there. We'll dive into that a little bit deeper, but do you have anything to add there, Peter?
No, I jokingly tell people, because director of specialty banking, they ask what does that mean? I said, well, specialty is anything that's high risk.
Yeah.
Now I mean as a joke, but the truth is, yeah, specialty by definition, of course, is anything that's sort of out of what you would consider the norm. And to your point, that maybe you don't necessarily have to be afraid of it or stay away. It's an institutional decision. You don't have to do it, but they tend to be an underserved community demographic. Grab market share, grab fee income, deposit growth, and all you really have to do is be willing to do a little more.
Yep. Yeah, exactly. Ethan, next one. So these are some good examples. These are just a teeny tiny portion of specialty markets out there, but independently owned ATMs, very underserved market and really very important to the ecosystems of a lot of communities who don't have brick and mortar banking centers or credit union centers there anymore in their communities. There's some really interesting numbers that we won't dive into. We could do a whole nother webinar on independently owned ATMs and how important they are to local marginalized communities. And, they've been around forever and ever and ever. And I rewrote and redlined the FFIEC manual a couple years ago for independently owned ATMs. And just to help people better understand how that system, how that whole world works, right? How the money flows, so you can get a little bit more comfortable in that space. And if you take the time to read that, you can read the risk mitigation factors in there. They're really not all that cumbersome if you know what you're talking about and understand the industry. But again, that could be a whole nother webinar, but that's definitely in your backyard. Money service businesses, also underserved, desperate to find banks and credit unions that will serve them. Hemp and CBD are surprisingly, we've had the 2018 Farm Bill, that's 5-6 years old, if I can do the math, right? Still sometimes has a hard time finding somewhere to bank. Cannabis, that's a whole world of stuff to talk about there. We will in a little bit. NRAs, foreign individuals, we're seeing a lot of institutions reach out to us to help them actually build out these programs because they're realizing who's in their communities and who's really underserved in those markets as well. There's a lot of lending opportunities in that space as well. And of course, the hottest topic over the last year was fintech and BaaS as well, which is banking as a service, where you serve as a sponsor financial institution to these different fintechs. That is a whole slew of webinars we could do on that subject.
Would you say hot topic though? Is that the right word?
Yeah, right. No, well, it's the most controversial of them, I think, of late too, because of all the all of the talk about the regulatory expectations that are rolling out in that space. And just like any other of these where we had to wait to understand what they really want to see from the regulatory perspective.
Yeah.
I'm seeing people really slow their row. Some institutions really slow their row and don't want to officially launch their programs until they get that regulatory guidance. So,
it's a funny aside on that NRA. So I worked for a bank, and this partially is what kind of got me into cannabis banking, to some extent. So one of the banks that I worked for, there was a gentleman who specialized in EB5s. And he was like well known, he was one of the most well-known EB5 bankers across the country. And he made so much money doing EB5 banking that the bank had to change its comp plan. Like he blew out the comp plan so far that the bank actually changed its comp plan, the following year.
Yeah.
And when I heard that, I remember thinking to myself, what the hell is EB5? But the point is that it was so niche, and I didn't really know what it was. It prompted me obviously to go learn up about it because I wanted to do that too. What I kind of came away from that was I thought, wow, specializing in something in a particular niche, but like really diving in,
really owning it and understanding these markets. I mean, when I started my hemp banking program like years and years ago at this point, there was no training out there available. There was nothing. So it literally took getting in the community and them helping me understand how plants grew, how THC levels worked, who's involved in the ecosystem. And man, if you reach out to your community and tell them you want to learn more about them so you can help serve them better, they are more than willing to show you everything because they want the access to banking. So it's about, as far as you want to take it too, we're happy to teach you through all these webinars, but they're only an hour at a time. If you really want to get your hands dirty and understand who's in your community, reach out and say, I want to learn more about what you guys are doing so I can see if we can help you serve you better.
Right.
Very well said. That brings us to our first poll question, where we actually want to see how y'all are helping your communities. If there is anyone on the call today that is actively serving some of these underserved markets, we've got this poll question on the screen asking, my bank or credit union currently handles, and this is a multi-select, you can choose as many or as few options as you'd like to. Those options are independently owned ATMs, money services businesses or MSBs, hemp, CBD, and cannabis, NRAs and foreign individuals, and last but certainly not least, fintech and banking as a service. We'll give you all just a couple more seconds to get your responses in here, and then we'll see how they stack up to what we expected. Excellent. Thank you all for getting your votes in here. It looks like you should see our results coming up on the screen here today. Most of the people on the call are serving both independently owned ATMs as well as hemp, CBD, and cannabis. So it's over 50% for both of those. Just under the 50% mark, we see NRAs and foreign individuals, followed not too far behind by money services businesses at 41%. The lowest, but still not insignificant, with 22% of today's respondents saying that they are actively serving fintech and banking as a service. Peter, I'm curious, how does this stack up to what you're expecting to see? Is this a little bit more, a little bit less? What do you think?
Oh, I'm a little surprised at the independently owned ATMs, actually, but the rest I think is in line.
Excellent. Well, thank you all for sharing those results with us. I appreciate it.
Yeah, I'd agree with you, Peter. Like, I hear so many of these stories of independently owned ATM operators being kicked out of institutions they've been at for 20-something years because they've had a management change, that risk tolerance changed, all that. But it's nice to see that big of a number because maybe there is some movement, people becoming more comfortable there. So I think it's important before we go any further to talk about what the key roles in specialty banking is. And Peter, you probably speak to this a lot, but the whole point of this slide is to let you know that this is not a siloed effort, right? It takes all departments to come together to really build a program out and do it successfully so that it's not siloed in a department where things can get lost, regulatory violations can happen by accident because somebody didn't speak to somebody and tell somebody. I'm telling you that from experience because I had a new treasury management officer switch all of our MSBs over to a courier one time and didn't tell the BSA department that she did it. So the cash transactions were not rolling in as cash. They were rolling in as ACHs, and we had to backfile $2 million worth of CTRs. And, I always tell people, just don't make the same stupid mistakes I did. That's why it's important to not silo these efforts, right? So, Peter, you can probably speak a little bit to kind of, what you've seen how you've seen that process work out at other institutions as well.
Yeah, I mean, beyond just the specific roles, I agree with you. It's actually important, I think, for any, since we're talking about cannabis specifically today, if you're going to get into any of these specialty banking markets, I think you do want to know that everyone's on board. And again, not specific to the roles, but the different departments. So Kristin, to your point, let's say for the sake of argument, you're my BSA officer, and you don't really want to do cannabis banking, but the business side made a decision, we're going to do it. Well, it's actually very easy for you to play gatekeeper, and that
Right.
program will fail simply because like accounts will never get open, or it'll just be a nightmare getting any accounts open, et cetera, et cetera. Same thing on the sales side. Let's say for the sake of argument, you want to get into cannabis banking, but you're unwilling to market. Well, then how will anybody know that you have a program, right? And that's okay, by the way. I'm not suggesting you have to do any of that. My point is, have you spoken to all the stakeholders internally, externally as well? If for the sake of argument, your institution has a provider, let's say internet banking provider, that won't be okay with the fact that you're banking cannabis, and you didn't know that, that could be a problem, right? So yes, I think it's important to think about the roles and whether everybody's in or out.
How do you deal with when you have, because on the defense of the BSA side, it's like, oh my God, like it's one thing for salespeople to go sell it, then I got to manage it forever
Yes.
and ever, right?
You're
And do
welcome.
all that burden. I mean, how do you deal with people who are just like begrudgingly because they just don't want to, they're overworked already and this is just a whole nother burden?
Well, two ways. One, ideally, upfront that conversation happened. Ideally, right? Like so you and I ironed it out, right? Like this, I'll do X, Y, and Z to take it off your plate. Let's talk out some of these things that you have concerns with, right? Maybe they're not true concerns, and it's just something that's in your head. And then secondary to that, of course, is if that didn't happen, and now we are moving forward. Again, it's the same process, really. Let's talk it out. Like, what
Right.
are your concerns? Why don't you want to do this? Is it a true barrier? Because if it's truly a barrier and it can be solved, staffing, resources, a tool like RiskOut, for example.
Right.
If you're sort of feeling like, well, I'm doing all of these things, and I say, you know what, I know about this company RiskOut. I know they do X, Y, and Z. Will that help? That's such a big difference for you to just hear that, like, I understand.
Yeah. It's creating those bridges between those departments because there can be always, there's historically some rub between, your business development. I don't know why I made a thumbs down, but it worked out.
I was about to give the same reaction, so it's okay.
Well, I just, and so the more that you can bridge those gaps that traditionally exist when compliance and BSA is traditionally looked at as the no machine, right? We say no more than we say yes to things, But I think, yeah, it takes a village for this one. So Ethan, next slide.
Oh, I think these are my slides, right?
Yeah.
Not that I created them. I think I'm famous for not creating slides.
I've noticed that about you.
Okay, cannabis banking. Many of you may have heard FinCEN tracks a statistic. According to FinCEN's statistic, there's approximately 812 financial institutions actively banking cannabis. However, if that were the case, why do we always hear that cannabis operators have trouble getting banking? So the insiders believe the number is closer to 100, maybe 150 or so. And that, of course, even that varies depending on, well, what are they willing to do, you know? So for example, some might only be willing to do indirects or, you know, tier twos as some institutions use, you know, et cetera, et cetera, et cetera. So a couple of things to consider here. One, believe it or not, there's no textbook definition for what is a cannabis business. It doesn't actually exist. Now, some things are obvious, right? You get a licensed operator, so a license in the state of New York, where I'm from, for example, that's a cannabis business, of course. But what about the holding company that owns that, that has ownership shares of that cannabis business? What about the principal owners of that cannabis business? Are those cannabis-related accounts? What about the landlord, for example? You've got a client that is just a property owner, but it's a single use property, and their tenant is a legal dispensary. Is that a cannabis business? Well, it's a little unclear. And of course, institutions will rightly err on the side of caution. If you have any doubt whether you should or should not file a SAR, naturally you will file the SAR. So one, the lack of a true definition of what is and is not a cannabis business. Two, the tendency for us to be conservative when we think about these SARs. And then lastly, what I just mentioned, when you think of the multiple layers, and cannabis businesses tend to come with multiple entities as is. So you get one, licensed retailer, for example, that might come with 2, 3, 4 entities. That's just really one company. Now, it's one thing if they're all banking at the same institution, but what if they split those up? Maybe for fee reasons, right? Maybe for preferences, depending on technology, et cetera. So in other words, you may have multiple entities getting SARs filed, even though it's technically the same business. But keep spinning those examples forward, right? Like, so I'm the treasurer of a company called Asian Cannabis Roundtable, and it's just advocacy, education, et cetera. But we literally have the word cannabis in the name. Is that a cannabis business? Honestly, I've had accounts closed for that entity, so I know that my institution viewed it as a cannabis-related business. The question is it?
Right. And for the sake of, like you said, for the sake of just filing a SAR to err on the side of caution, just because they're filing a SAR doesn't mean that they're actually actively banking cannabis, right?
Yeah.
They're doing it as a CYA. And so
Right.
this number is definitely inflated, and we know for a fact that if there were that many institutions, things would be a lot different in these communities,
Yeah. Although I would say that has changed a lot. I mean, I think I guess I ran my first program I guess about 6 years ago or so, and back then, yeah, it was far less competitive. So today, what I see on the ground is that almost every scenario I get into, it's actually competitive, meaning people are asking, well, what are your fees? Oh, well, so-and-so charges less. And what are your services? I want X, Y, and Z in order to move my account over, et cetera, et cetera.
Yeah, I agree with that. I think we'll touch on that a little bit more in here in a couple of slides, but I think it's important to know that the former thought of being able to charge a cannabis business $2,500 a month to bank there and only have a deposit relationship is not the case anymore, right? It's much more competitive in that realm, and we're getting even the smaller of the smallest institutions starting cannabis banking programs, and not necessarily because they want to grow a huge program, but it's more so I need to serve the 1 or 2 or 4 clients that I have that are already existing who want to open a cannabis business here, and then we'll move all of their entire relationships elsewhere that are vital to our well-being as an institution, right? So kind of being strong-armed into it in a way.
That's a great segue into our second poll question, which we should see popping up on the screen here. And that's asking, does your institution lend to cannabis-related businesses? So I know as Kristin was saying, we used to just be able to see these deposit accounts, but now we're asking about the lending side. Those responses are, yes, we currently are lending. Not currently lending, but we do plan to maybe down the road. No, but we do offer other services to cannabis related businesses. No, we're not lending, and we also have no interest in serving cannabis related businesses. Or, of course, you got to have that final option of, you know what, I'm just not quite sure. I'll give you all a couple more seconds to get these responses in. Very interested to see, yeah, especially as we've been talking about how competitive it's been, what our audience on the call is seeing and how they're responding to cannabis lending. All right, looks like we got most of our respondents in, so we'll turn those results around. And it looks like we've got a pretty even distribution across our attendees today. So a third of our attendees on today's call say that yes, they are currently lending to cannabis related businesses. After that, our second biggest cohort is in that no, and we have no interest in serving cannabis related businesses. So I think that's pretty interesting, particularly based on the last poll question that we saw, where most of the people on the call are actively serving those CRBs. After that, we've got a pretty even split, 17% saying no, they're not actively lending to CRBs today, but they do plan to down the road. 13% saying no, but they're offering other services, just not on that lending side, and 13% not quite sure. Kristin, let me throw this one over to you. How does this compare to what you were expecting to see?
I think it's, it's probably right in line where 1/3 you have a more potentially progressive institution who's kind of tried to tackle that to diversify, their offerings to these. What we see a lot of times is those who don't lend aren't really actively trying to grow a huge program, right? Because the less you offer and diversify your services that you're offering, the less likely you are to have folks, especially existing cannabis businesses that would probably bring decent deposits and fee income to you. They're not switching for the sake of just switching to another deposit relationship. I told Peter this the other day. I used to work with a guy that would say, he worked in treasury management. He'd say, well, nobody wants to switch banks unless they're mad at them. And I'm like, they're not wrong there. So what are you going to do to ensure that you can keep your existing good customers? And one of the plays is lending. And I think people just don't understand, or they're too scared of it, right? They don't understand that there's ways to do it smart and safely for their institution.
We did have a question that came in as we were running that poll. I thought was a pretty interesting one, and it says, but how many people are lending with uncollateralized loans? I know we didn't run that poll question. Probably maybe have some different responses on that. Peter, what do you think? Do you think we did maybe see different results?
Yeah, that's a good question. So let's say you're willing to lend to cannabis. So just, philosophically, you're not against it. The question is then, does a cannabis business fit in the traditional underwriting box? And generally speaking, maybe not. So let's say, for example, so 4 C's of credit, right? So right off the bat, capacity. Let's assume they have the capacity to pay for that loan, to debt service. Well, if you're in a new state, so New York, New Jersey, Connecticut, right, my local market, mostly startups. So in other words, most of the prospects that we receive from a credit perspective simply just don't qualify. They can't show us 2 years of tax return, or they can't show us 2 years of positive tax return, et cetera, right? Then even if you get past that, you've got collateral. So, the most valuable asset, the license, can't be liened. Inventory, right? Even if it could be liened, do you want the optics of that? Oh, I foreclosed and seized, 100 pounds of THC. I'm not sure that many financial institutions wants to do that. Then you get into sort of maybe iffier topics of perhaps controversial topics of the question of character. Now you have certain states, for example, again, New York, that has prioritized licensees that actually have a record. So traditionally, that would be a negative, when viewed through the lens of banking financing. But here it became a key factor in this business getting a license. So yeah, it's a very good question. Are you the type of institution that would normally do a loan that's just completely uncollateralized? And if the answer is no, then you may not be able to lend to cannabis, period.
Yeah, I agree with that. Well, I guess when we talk about the landscape of the cannabis industry and opportunities, I think it's, important to understand the projected growth of it over time, right? We're
Yeah.
going to see more states come online. We're going to see existing states grow. And I thought this was a really interesting chart because we're talking about the retail sales estimate, and then look how much the additional economic impact is on top of that. So for every $10 spent, 18 more dollars goes back into the economy. And, we won't talk about necessarily scheduling and descheduling, right? And how that may impact things, because I don't like to ever predict what the government's going to do. If I was holding my breath for the Safe Banking Act, I'd be dead a long time ago. But I think it shows that if you were to get into a cannabis banking program and you really dedicated it's a well thought out program, and you dedicated the resources and had the right tools in your pocket, that it's not something that's just going to be a blip, potentially like a crypto was, right? Where it was like really hot for a minute and then just fizzled out. It's consistent expected growth for that,
Yeah, I agree. I mean, if we took the word cannabis out of the equation, I think that this is the kind of thing you would look at and say, wow, I want to get in on this industry, right? In multiple states now, Massachusetts, Illinois, they are reporting a higher excise tax from cannabis than they are compared to, say, alcohol. In a state like California, it's now it swaps places with almonds as either the number 2 or number 3 cash crop in the entire state. So again, if the word cannabis was not in the equation, I think every institution would say, oh yeah, that's the hottest new industry we want in. We're trying to find a way, we're trying to hire the right talent to bank this industry. But of course, adding the word cannabis back in it changes the conversation. But no, I agree. I mean, if you were looking at this chart, you would say, how do I get in on this?
Right, exactly. I mean, this is just a glimpse of all the states that have legalized are in different phases of it, right? I'm in North Carolina. Let's just face it, we're probably going to be the last state that does legalize it. Virginia is had a law pass, or was ready to sign everything, and their governor vetoed it. There's shifting things in the market to consider, but I think this is a good point to show that every state is surrounded by somebody doing something with cannabis. And so you have to consider it and whether you're going to bank it or not, you have to consider it in how you proceed, how you're proceeding, or how your policies are written,
No, for sure. I recently went full Canadad on my kid because he was, I guess, apparently for school, he's studying, marijuana for health class. And the statistic in his lesson showed 38 medical states, but it said 24 adult use. And I was all like, no, it's 27. Then I said, but actually, if your teacher said 24, the answer is 24. Like, don't go by my answer. But to your point, we've gone well past the halfway point, right? So 38 medical states, right? 27 adult use states now. And if you think about the fact that they're mostly coastal states, we're well over half of the population, have at least a medical program. And actually, for the institutions thinking about banking cannabis in a medical state, that's the perfect time to get in, because most states follow this path where you have a medical program and then eventually an adult use program passes. And, if you recall from the previous chart, then there's just explosion,
Right.
And getting in early does give you the first mover advantage of grabbing market share. And as Kristin already pointed out, inertia is strong. Once somebody's banking somewhere, they tend to stay. I mean, unless you really screw it up.
Yeah. I think one more point to make here is that just if your state is not legalized cannabis, that doesn't put you out of the market of not being able to bank them. I've got banks in North Carolina that are headquartered in North Carolina that bank cannabis in other states where it's federally legal. So don't think because where you're headquartered, if it's not federally legal there, you can't do it. You absolutely can. You just need to have the right conversations and the right processes and procedures and controls in place, right, to be able to do it successfully. Well, I think, the big elephant in the room here is that it's federally illegal.
Oh, I heard, yes.
Yeah, still a Schedule I substance, like right there along with, all of the other Schedule Is that are just a little bit more dangerous.
Right. So to your point, the obvious here, it is a Schedule I based on the Controlled Substances Act. Now we could probably look at that the CSA Schedule I and say, well, that's patently untrue, right? Obviously, because the hallmark of Schedule I is that it has no medical usage. Yet cannabis has multiple products, but at this point, between Marinol, Epidiolex, these are FDA certified drugs, and so there's clearly a medical use. So clearly, at some point, cannabis will be rescheduled, descheduled, et cetera, et cetera. But that's not today.
Right.
Today, there's a discrepancy between federal and state law. Taking that to the next level, we have federal supremacy as a concept. That is to say, in the event of a discrepancy, we know the federal law is supposed to trump state law. And of course, most institutions, whether you're state chartered or not, if you're FDIC insured, NCUA insured, you answer to a federal level agency. So what do you do about it, right? It's complex. I mean, in New York, in 2018, our DFS actually released a memo encouraging state charter institutions to bank what was then a newly legalized medical only industry. Oddly enough, since we went adult use, that memo has not been updated. Why that is, well, we don't know, but yes, that of course, that is the entire issue around cannabis banking, is the fact that it is in fact federally illegal.
I think it's always interesting when you bring up like the Cole memo, and it's still, in the 2014 MRB guidance has never been updated. The Cole memo was rescinded, but everybody just pretends that never happened. This is the world we operate in this space. So.
Well, what I think is sort of interesting so people bring this up when you say cannabis banking, why is cannabis banking an issue? Well, the most obvious and natural answer would be exactly this. Well, it's federally illegal. So the question though is, if FinCEN says 812 financial institutions are banking cannabis, right? So how does an institution, what can I do to make a cannabis business less federally illegal? Nothing. There's nothing I can do to make it less federally illegal. So a lot of, a lot of cannabis banking is sort of just simply following the FinCEN guidance, and quite honestly, there's a lot of optics involved, right?
Right.
So what is the true risk in cannabis banking? Scrutiny. You've invited scrutiny. More importantly, you likely have it in your policy, right? It's probably likely written out in your policy somewhere that the reason you're willing to take this risk is that you have heavily vetted, some language therein, right? You've created some sort of an enhanced onboarding process. In other words, you've heavily scrutinized this customer before you've onboarded them. So if you've invited scrutiny and you've built scrutiny into your program and something is still found, an examiner comes in and they still find something, that's the true risk in cannabis banking.
Yeah.
Sorry, before we move on, we did get a question that, Peter, I think that you might be able to speak to, since it's particularly concerning New York. And that says, is New York currently working on their own state banking program, such as we've seen in states like California? Are you able to speak to that a little bit?
I'm not aware of that. Obviously, New York has put some effort into sort of financing programs. There was this whole thing about a public bank which I believe has been widely misunderstood what that means, because a public bank, just means that the state or municipalities within the state can bank at the bank that the state created. That does not mean that cannabis operators can bank there. And I suppose they could, but they still would be subject to the same concerns, because in order to get into, ACH or wires or whatever, at some point you need a connection into the traditional financial system. So again, unless the question is about the financing programs that New York State has set up, I can't see how someone can create a siloed banking system.
That makes sense. Thank you for that answer, and I'll move us forward here into some more regulatory considerations.
Yeah, I think we touched a lot on these. A lot of the times in cannabis banking, it is you don't know what you don't know, and that's because there's just not a whole lot of. We're working off a 2.5-page document dated 10 isn't just turned 10 years old. The 2014 MRB guidance. So it's like, if I'm just going off this page, I've read that thing 1,000 times, and there's different ways you can interpret it to different things. The whole point with any type of specialty banking is to build a reasonable and achievable program. If your institution truly wants to get into it, it's about finding the right risk balance, right? It's not your job to police the industry. It's your job to ensure that the activity that's occurring in the accounts at your institution are commensurate with the stated nature of the business, right? The cash intensiveness of the industry can create varying challenges, but there are so many knowledgeable people out about cash in transit now that we could have a whole webinar on cash being the least of your worries for an institution if you have the right setup, the right connections with the right cash in transit, being cautious of who your cash in transit folks are, ensuring that they are insured is very important. And then again, obtaining the right technology to assist. If you really want to grow a program, if you have a handful of customers, I'd say less than 5. Doesn't matter if you have one, you have to have a cannabis banking program. But it doesn't mean you have to have this extensive technology to have 1 or 2 or 3 clients. But if you plan to actually put that investment into the program and grow it, if you have more than a dozen clients, I would say that's probably even pushing it, probably more than 8. You need some type of technology to really help you through the life cycle of the relationship, because it's one thing to go through the onboarding process. It's another thing to continue to follow up with your client to get the information that you need to file your SARs, to do your reviews, to ensure you've got the most updated information on the business and their operations, and checking in all the time. Doing that manually is not scalable. You'll have to have an army of people. Otherwise, you're setting yourself up for failure. But that technology doesn't have to be an expensive piece of technology, right? Your existing tools like your Verifins, your FCRMs, your Abrigos, they may be able to help you a little bit on the compliance piece, but they're not built to help you bank this industry or bank any specialty industry. So you need to really be thinking through, is it people I'm going to hire? Is it technology? Or is it going to be a proper combination of both, where the technology I get is actually helping me streamline all of these, burdens that go into banking these industries? Or am I planning to have, 4 to 12 people in my BSA department?
Yeah, this might sound counterintuitive, but when we think about cannabis banking, when people ask me about cannabis banking and they say it's high risk, et cetera, internally, I actually chuckle a little bit, because if you think about it, a licensed cannabis business, right? They've gone through so much scrutiny already in order to get licensed, to maintain the license. So between seed to sale tracking, site audits from the state, et cetera, that might be your safest. Those might be your safest customer. They have to track every penny, I don't know how familiar you are with like metric tags and stuff like that. Like they're literally tagging plants.
Yeah.
So the the idea that a licensed cannabis business is a risk to your institution, that's a little bit of a myth, actually. Now, don't get me wrong, to add the word cannabis in, right? Like it's federally illegal. So,
Right.
and then yes, the challenges that come with it. So, for example, the cash, which actually has lowered a lot. I mean, over the years. The reality is that the mix is changing a lot. Most of them that I see now are more like 70-30, meaning 30% cash.
Yeah.
Probably not that different than, let's say, a restaurant.
Yeah. Yeah. Ethan, you want to move to the, so this is probably why you're all here.
Except
So
the
you
30% that I know.
saving the best for last, but optimizing a program again goes back to what kind of, it's all about how your program goals, right? If your goal is to just appease a handful of customers that you have and have a cannabis banking program, then maybe your existing tech stack or lack thereof is okay. But optimizing a program means that you're thinking what it takes not just to onboard them, but what it takes to maintain their relationship long term. So there's a lot of factors built into that. Really, if we're talking about the technology piece, that we've touched on a lot of those points already, but it's want the technology, it's also about what efforts are you willing to make as an institution to let your market know that you are actually serving this. Some institutions shy away because they're scared of what their existing customers will think, or they think it's a field of dreams scenario where if they build it, they will come. But there's a lot more competitiveness out there. So if you want to see your program be successful, you hire the right people. You hire Peter and you get out there, and it doesn't have to be a big noise you're making, but put some effort into letting your community know you're there to help them serve them, because they're not, it's not as much word of mouth anymore where that you can rely on, and then understanding your market allows you to understand the opportunities for growth and expansion, right? So if you don't take the time to understand, not just when you initially do your program, who is in your backyard, but you don't, update that information on some type of set cadence, then you're not going to know what the opportunities are for maybe different product offerings, maybe something that would attract even more bigger depositors to your institution. Well, I've beaten this one with a dead horse. Anything to add, Peter, to the technology side of things?
This is a controversial, I guess, topic is whether or not you need specialized tools for cannabis, or specialty banking in general, I suppose. And you touched on this earlier. The reality is you don't need it. Like any tool, it's there to help. It's there to streamline the process. If you understand the tool and you thought through its role in your process, and you can see how it improves, well, that's why these tools exist. That's why technologies exist. So I think it's important to a program, but it's not a panacea, and it's not a must-have necessarily.
Yeah, and I always just like to caution people when you're looking at technology providers, risk out included, you've got to see how it fits into your ecosystem. And what you want to do is have that healthy balance of a reasonable and achievable program. If your software that you're buying is over-engineered to look at things that aren't even your responsibility, then you're creating more work for yourself, essentially, because the more information you collect doesn't mean that it's better for you to have all that information, right? The regulators expect if you've got the information, you're going to do something with it. So it's important to strike that right balance of collecting the information you need to really have that risk-based approach to understand that the business is operating legally, that the activity in the account is reasonable and is commensurate with the stated nature of the business. So
sorry, in the early days, we used to, actually, you might remember, we used to collect, well, and to be fair, you read the FinCEN guidance, right? And if you were to apply a very literal interpretation to it, meaning I as an institution, I've got to hit all these things, right? So how would you do that? So in the early days, we used to collect the cannabis business's license application, meaning the application they filled out with the state to get licensed. So just taking an example, in New York's first licensees, some of those applications were like 5,000 pages. So
Yeah.
so a couple of questions. One, how are you collecting it, right? Meaning the ability to actually get 5,000 page, document to come through. Two, who's going to read it?
Right.
Lastly, do you understand, is any of it relevant to you as the institution, right? And then of course, to your point, now that you have 5,000 pages of information, what did you do with it? Did you protect it? And it gave you a lot more information than now is auditable, even on the transaction monitoring side, right? Like it's common to see some programs track like every transaction. So like you actually know the SKUs that are being sold and what dollar it tracked to, et cetera, et cetera. And the question kind of circles back to, as an institution, do you truly have that responsibility?
Right. Right. And it's also hard when you set up, traditionally that type of monitoring is driven more towards the retail space, right? Because it's more point of sale driven. Well, the problem is that when you monitor businesses, your retailers one way, well, you've got a whole other part of the ecosystem that you're probably banking. So are you piecemealing? I'm going to monitor my retailers this way and my growers this way and my processors. Really be thinking about that when you're choosing, a technology provider, because you want to be able to streamline processes, not create more work for yourself, especially when it's unnecessary work.
Right, right.
Oh man, always the biggest, another big elephant in the room. A lot of times we're talking mostly to community financial institutions. Your BSA compliance department is usually like one or two people deep at best, and that's fine, because when you're just running a traditional institution, maybe that works for you. And maybe even that BSA officer is also the compliance officer, also the, vendor manager, whatever. So it's really about understanding, if you guys collectively decide as an institution that this is what you're going to do, you need to ensure that the parties that are involved have the necessary skill sets to do this. If you have somebody who's a classic overthinker of a BSA person, like Peter said earlier, they may just be risk averse. Maybe they're morally opposed to cannabis. That's a huge thing that happens quite a bit at institutions, especially like the age frame that just associate it strictly with Woodstock and in that space. I hear all the time, people are like, well, my board won't pass it because 2 members are morally opposed to that. I say all that because I think it's important to, if they aren't necessarily, if they're going to be the cog in the wheel here that is holding everything up, then perhaps it's better to consider shuffling responsibilities around, or training a new employee, training an existing employee to who's willing to kind of go in there with an open mind and say, really, my job here is to ensure that there's nothing illicit happening that we need to report on. And sometimes that takes hiring people who've done this before, but a lot of times it's a matter of, I have a lot of institutions who have hired tellers off the line and brought them in the back and taught them from the ground up about cannabis. And sometimes that's easier because they haven't been tainted by another thought process at another institution, and you can train them like you like. But it's what we see a lot in institutions too, is that division of okay, this is my BSA staff who does everything, and this is my cannabis making staff who specializes in that. That traditionally happens when your program starts to scale up, and that becomes more like a full-time role for somebody. But I think it's really important to evaluate people holistically, employees, even those have been there a million years, to say, okay, are they willing to help us achieve what the whole reason we're wanting to do this program at all?
Yeah, I mean, I don't necessarily think, and then maybe I'm biased because I've been doing it for so long, but I don't necessarily think you have to go too far with any of this stuff necessarily. At the end of the day, so to your point about reasonable and achievable, right? Like, if you kind of strip away all the fancy terms and whatever, like all you really need to do is have people that can understand licensing structure, and
Yep.
thus the relevant business information that might come along with that. So to your point about, you know, there's a difference between a retailer and a cultivator, right? Of course, duh, right? So your expectations when you think about, you know, your risk tolerance, your tolerance variance, right, is obviously very different for a retail store than it would be for a cultivator, than it would be for a wholesaler, than it would be for a processor, et cetera, et cetera.
Right.
So the front end can be important there, right? Interviewing the customer and saying, okay, I understand the license, I understand the process, here are my expectations, asking the right questions. And then the same thing on the back end, the BSA team having that same basic understanding of, okay, this is a cultivator, it's very different than a processor.
Right. Right. It's huge.
All righty. Well, I know we're coming close to the end of our time here today, so we will move into Q&A. Before we dive into our questions, we do have one final poll for y'all that should be popping up on your screen now. Like all the other polls, that's completely optional, but just asks if you would be interested in getting in touch with Risk Out about anything that we talked about today, whether that's cannabis banking, other specialty markets, a BSA solution that we have coming out, or something totally different. We're always here to help and would love to assist you. So let us know if you would like to get in touch on that front. But for those of you that do have questions, thank you to those that have already asked. Feel free to use that GoToWebinar control panel that you have on your screen and ask those questions. We'll go through them over the last couple minutes of this session, but if you do have a question that we just aren't able to get to during today's webinar, we will be sure to follow up with you after today's session, make sure we get you the answers that you're looking for. All righty, we had some come in here. One of them, let's see, is saying that their board has been what they called cannabis curious for years now. So they're constantly doing research on how to enter the market, what that's going to look like from a program perspective, but they never actually make that decision to dive in and start a full program. Do you have any advice on how to navigate this situation?
I do. Don't overthink it. Honestly, sometimes it's easier just to try it, right? Like do a scope. You know, onboard one customer, see what you think. This is similar to the fintech question that kind of popped up before. I'm sorry, not question, but we kind of briefly addressed it. There's a tendency to be like, you know, full stop, right? Fintech. But is it really that hard for you to open an account and limit that customer to, you know, X, Y, and Z, and then just try it? You'll learn a lot. You'll learn a lot, and you can always walk away if you decide not to.
Yep, I 100% agree.
Great answer. We had another one that said, I know we were talking about how it's important to consider third-party vendors, such as internet providers, before offering direct MRB services. This person said that's not something that they had considered before. Is there a list or guidance available on providing like vendor types that financial institutions should be thinking about prior to directly banking cannabis-related businesses?
I am not aware of one, but I know the most important subject that comes up more often than not is your insurance. Right? Will your insurance allow it? That's a huge conversation. And then there are considerations. Well, I remember when I just in hemp was federally legal at that point. We used a large institution to process our wires, and that institution was going to revoke our contract because we were allowing hemp businesses to wire money. And so I think you're just going to have to go down your vendor list and say, you know, it should be made, they should be made aware that you're doing it, not necessarily ask permission. It's the same conversation I had with regulators. We're saying we're doing this, and if they really object, they're going to tell you. But just make sure you're mindful of when you bring up those conversations, because you want to make sure you're talking to the right audience at that vendor who isn't going to raise red flag all over the place over something they just don't understand, you know.
I think we got time for one final question. Again, if we weren't able to answer your questions, we will follow up with y'all offline. But this says, if we're interested in getting into lending, but we have a loan that we are unable to fund ourselves. Instead of losing out on that business, are there maybe partner setups where you can earn a referral fee by directing that borrower to a partner institution? I know certainly y'all won't throw out names of direct financial institutions, but is that at least a relationship that y'all have seen in the market today?
Yes, that is a common issue. For the most part, cannabis banking is a patchwork of relatively small financial institutions. So even if you're willing, you just simply may not be willing to cut that size of a check or unable to cut that size of a check. So yes, there's been some clubbing of deals and or A no B no situations where a private lender comes in over top. So yes, that's definitely a thing.
Well, excellent. Thank you for that response there, Peter. That is all of the time that we do have for today's webinar. Thank you all for joining us, and a huge thank you to both Peter and Kristin for taking the time and sharing their expertise with us. Please keep an eye on your inbox. RiskOut will be sending all of the resources, including the recording, the slides, and any other handouts from today's session. So that should be hitting your inbox this afternoon. We will also have a brief survey following today's webinar where you can provide us with a little bit of feedback on today's session. And if there are any kind of topics that you'd like to see in future webinars, go ahead and let us know there. If you do have any additional questions, or if you want to get in touch with us, you can see our contact information there on the screen. If you don't already follow Peter on LinkedIn, I would highly recommend it as a personal note there. If you do want to stop by and say hi, you can visit us anytime at riskout.com. We hope to see you on our next webinar, and thanks again to Peter and Kristin.
Hi, everyone. Thank you.